afternoon, everybody. This is Dennis Wilburn, the Active Trend Trader. I want to welcome both Anil Parikh and Steve Farrar to today's session. And as you heard, Steve, before I pushed the record button, was saying, it's a tough market. If you feel tired and feel like you're getting beat up, that's, I feel like I've been like boxing with Mike Tyson or something, guys, and he keeps knocking me down and I keep getting up. But the thing about it is that I'm really pleased about, though, is I'm mostly in cash and I'm waiting for the market bottom. So what are you guys? Are you in any position whatsoever, or are you just kind of like hanging out?
I have one position that I'm kind of managing options around. It's a way, it just, for some reason, I never got rid of it. And I'm ahead on it. So I'm selling options, various kinds of options, puts and calls against it, just to generate more income.
Yeah.
Other than that, I'm in cash, but I am looking to maybe take a short position end of the day today.
Okay, and we'll talk about that shortly.
Yeah.
What about you, Anil?
I'm in Lilly and Merck and still hanging on.
Okay, and so I was kicked out of my Merck position, and that's okay. And David says, at least don't take a plane ride with Mike Tyson, because that could be dangerous for your health also. And so,
absolutely.
And for those who don't catch on to that, we're talking about basically somebody was hassling Mike, and so Mike apparently just whacked the guy. And so I wouldn't like to get whacked by Mike Tyson. So remember, all the materials we do present are for trading purposes. Traders should paper trade any new method prior to the risk of their own personal capital. That's one of the things I want to really suggest. I don't make suggestions about very much, but when a market, if you've never been in a bear market like we are in right now, it can be the best thing to do can be to basically just stand aside, watch and learn. Past performance is no indication of our promise of future performance. And so let's go ahead and jump into where we're at. I'm basically continuing up my 40% line. That's the white line you see there. I'm really pleased with that. And then that's where we were last week. And now this is where we are this week. We continue to climb while some interesting facts and figures I want to show to you right here is one, at least when I took the snapshot, the S&P had slipped into bear market territory. That could be not good, and also could lead to more downside. NASDAQ is the biggest loser this year so far, followed closely by the Russell. And so that's where we're looking at right now. And we've got some good stocks to look at. Part of the things that I want to, talk to you about is just, don't be fooled by short-term time frames. In other words, there can be a lot of what we think are if we were in an uptrend, we're getting some really good solid signals to take long trades. However, we're not in an uptrend, we're in a downtrend. And those can work out to be bear traps. And bear traps have really sharp teeth and can take off an arm or a leg, and you want to be very careful with those. So let's go ahead and jump on to today's session. I'm going to take a look first at the NASDAQ, and as I talk through this here, the S&P, and as you can see today, I'm looking at the indexes themselves. I am not looking at the ETFs. And the reason why is I want to call attention to a couple of things. One, as you see, there was a low from Thursday of last week. That's the 12th. Intraday, we have cut below that. That red line right there constitutes the 20% mark from the highs of, I want to say, the highs of this year, and also the high, the ultra high of the S&P. As we drop down through that. If we close below that, that could be an indication that we are going lower. Because one, we violated a level of support, but how much further can we go? I'll keep this really simple. I'm not going to throw any more fibs on here, but I've drawn a fib from this low. This is the COVID bear market low up to the high in January. As you can see, we have been the downtrend started in January when we had that bearish engulfing pattern, and now we're continuing to drop. This line right there, that is the 50% retracement of the COVID bull market. And I'm, sorry, that's what I'm going to call it. It's the COVID bull. This is the COVID bear market, and this is the reaction. In January 2022, things started getting ugly, and have continued to get ugly. That makes a very interesting target right there at that level. What is that level? And I'm glad you asked. That level happens to be about 35.05. Let me get it up there. There you go, 35.05 on the S&P. Now, if you want to know some of the other trajectories on the Fibonacci's, I did a really short video that I'm doing videos over on the YouTube channel, Market Tech Talk, twice a week now. Really short ones, less than 10 minutes or less. And I did the Fibonacci analysis to show where we could potentially hit for a particular rebound. If you are joining us over on the YouTube channel and you need to put in a chat box, I am watching you on my phone, and so if you do put in a comment, I'll see it, hopefully see it. And so we're standing by. So if we close below the low from the 12th, I'm anticipating more downside. Now, the thing about it is to remember is that, that's an opinion, but that's opinion of mine, but it's based on the probabilities that when you break through one level of support and close below it, the probability is you're going to go lower. So that is an opinion based on a proven probability. Now, what would change my mind? Well, what would change my mind if we go ripping back up through this low, or when we start taking out these, this high from today, or get a reversal signal short of my downside target. So that's one. NASDAQ, similar. What's it doing? It is also breaking down. Target on NASDAQ I've laid in there is down here about the 1068 level, 10,708. That is the 100% target, and that's on this shorter time frame. I'll just leave that here. Leave that with you. Not the larger, but the shorter. That is just a symmetric move of this slide down from the 4th of May to the 12th of May, back up to the swing high, projection to the downside. We just broke below that low also. That brings this level down here into play. Whenever I look at a Fibonacci extension like that, I'm looking at three different places. I'm looking at the 78% retracement, the 100% retracement, and then I'll go over to the weekly chart to show you the 1272 extension. That is a very strong area of support. As you can see with the NASDAQ, it is very wide. Again, we are failing to the downside. Larger range. This will make week number 7 that the markets have gone down. Now, the Russell, believe it or not, is holding up a little better because what's it not doing? It's not taking out the low from the 12th. And so the low of the 12th is still in play. We could actually get a rebound on the Russell to go ripping back up here. So just, watch it. The things that make that comment suspect are the momentum on the daily chart turning back over. The momentum on the weekly chart, what's it doing? It's still falling, guys. I mean, we are down below the negative 42 line, although we are close to getting a 3-line cluster on the weekly. Nothing on the weekly chart is really saying, hey, buy me, or and what it is saying is basically watch for further downside. And again, are we shaping up to get a bounce? I think so, but we could fall all the way to here, which is a past level of support. That's the downside target on is about the 1588. So, guys, I'm projecting more downside. At the same time, we are continuing to be extremely oversold. I'm going out on a limb here. This bear market is starting to look a lot more like 2007 than 2020. And that bear market lasted for over a year, about a year and a half. The good news, there is good news, is that once we do hit the bear market bottom, the average return in the first 12 months after the bear market is, guess how much? Go ahead, just type it in the chat section, and then as Anil and Steve go over the stock picks that they have, how much is the average return after, in the 12 months only, following the end of a bear market? Go ahead and just type in your suggestions or your guesses, and you can do the same thing over on YouTube. So, Steve and Anil, what do you think? Sorry for being so verbose.
No, I pretty much agree. I think to me, I try to keep it simple. We're making lower lows, and we haven't changed that tendency yet, so we're still in a bear market. And I have really no interest in the long side until that starts to change. And at the very minimum, you asked the question earlier, at the very minimum, we've got to take out Wednesday, Thursday's pivot peak on the upside.
Yep.
If we do that, I have no interest.
I agree.
In anything long. Yeah.
I think basically you're right, but I'm kind of excited now. It's
licking his chops.
But that's a good thing. I mean, I'm excited too. I really am, because the further we fall, the closer we are to the bottom. So speaking of, let's take a look at some good looking stocks here that Steve and Anil have come up. And I'm going to look at ugly stocks today. So here's Anil's pick. SQM. And SQM is what is SQM? That's
it's a miner, I think, huh?
Okay.
A resource miner? No.
It's a fertilizer stock.
A fertilizer stock. Okay, cool.
And it is on my Delaware focus list. It's one of the strongest. And today it has really pulled back. So I'll probably take half a position.
Okay.
It's given me triple screen signal. It's comp 99. It's markets with blue dot. Ran up about, I think, 15% this week. And has down today. So.
Okay, excellent. And so, I'd be watching this. I mean, you do have a good indication of where the sellers have come in at, but you got a nice breakout, and it went back and tested right almost to the dollar on the breakout. Got another level of support down here at the 80, around 87. So that'll be your standard 5% stop loss on this one.
Yes.
Okay. Excellent.
This thing has a growth, EBITDA growth rate of 23%.
Roger. Yeah.
So,
and the good thing about this also is earnings are already out of the way.
Yep.
So excellent. Steve, I'm going to go ahead and throw these both up. You can talk about them both quickly. CI, which is
it's an insurance company, Cigna. It's on the IBD 50 list, and it's holding up relatively well.
Yep.
We may be making a double top. We may pull back. I'm not looking for a trade immediately. Okay. I'm looking for some kind of a pullback consistent with the market holding or turning to the upside. And really, I'd like to see it take out Wednesday's peak last week.
Okay.
Before I go long. But it's one I'm stalking for a trade to the long side.
Okay.
A strong group, and it's holding up relatively well.
Excellent.
But I'm not ready for a trade right now.
Okay. And then the other one is in
Oxy, it's an energy play, and it's again a strong chart in the energy sector.
Yeah.
If I'm going to make a play, I don't mind doing it in the energy sector. And again, I'm not looking for a long today, but on some kind of price weakness and holding, I would go long.
Okay. One of the things I would just share with everyone is that when you're looking at a stock that's in a pullback type of position, okay, pay attention to which of the moving averages, and that yellow moving average right there, a gold one, is the 50-day or 50-day
Right.
EMA. Pay attention to what moving averages the price action is respecting, because oftentimes, yeah, the institutions are watching that also, so that they're triggered if we get back down somewhere between the 34 and probably the 50. They may step in and start buying, and if they don't, that's your clue that whoops, this probably isn't going to work. Right, Steve?
Right, I agree with that. And for me, the market's got to at least hold.
Yeah.
If it continues to fall, this will likely pull back and get quite a bit lower.
And so now here's my stock. Now don't laugh.
Target.
Now I'm looking at shorten this puppy to the downside once I get a good pattern.
Bounce.
What is a good pattern for me to be looking at? I'm looking at see this long big gap here, right here? Okay, yeah. That complete area is a level of resistance. Go over to this low here, draw across, and that gives me, that's my upside target. Now that's a pretty good size upside target, where I would anticipate prices could pull all the way back to there, then reverse, and I'm dropping this to the downside because I'm not seeing anything. I'm not seeing any relief of the headwinds that retail is facing. And so there's Target, Walmart, any retail space may be an opportunity to, if you have traded short before, that would be an opportunity. Again, it may not get back up to that level. And if that is in fact the case, what I'll be looking at is looking for a pattern here, because I've got that level of resistance there at 167.92. So I may just get a little bit of an upside bear flag and then look for a reversal. Again, momentum is showing down, and the retail got whacked this past week. So any thoughts, guys?
I like it. It's just how you trade it. I agree with you. I look for a bounce and then a short.
Okay.
No, I like it. It looks good. So
now here's something I would like to just share with you really quick. Here's the primary sectors that I look at. There's 17 sectors and the four indexes themselves, and you can see that looks pretty bloody.
I don't see any green.
Look, here's the net change. That's what I said. It looks pretty bloody. And so just wanted to share that with you. And if you don't have this, it's a good idea if you just want to really take, this is a very short watch list, but it covers all the primary sectors. And so it'll also, if you watch this and go review it at least once a week, you can get an idea of when things are starting to turn around, as you can see. And I'll just jump down here really quick. Oil, as you know, energy has been acting very nicely, but guess what? Energy looked like it's rolling over. What about oil? This is the oil patch. Again, also looking kind of weak. We closed below the 50. I'm looking at and all the moving and the what's going on with the momentum. The momentum is shifted to the downside on oil exploration. So just stand by to stand by. Now, the question to our quiz. Now, Stephen and Neil, you didn't make a guess on how much of a gain you get in the first 12 months after a bear market. You have any suggestions?
I'd say close to 70%.
Okay.
No, I just don't know.
Okay. It is. Drum roll, please. There you go. 54.18%. There's good news in that once we do get, that's why we want to be on guard, be ready for the bull market to turn back around. So good picks today, gentlemen. I really appreciate that. Let's go ahead and take a look at a couple other things. One is when the markets are volatile or weak, here's some things you can do to basically maintain your sanity. One is identify your go-to pattern. Have a specific pattern in mind. And that you will go to. Mark Douglas talks about this. Mark Minervini talks about this, is that, have just that single one and just focus on that. If you don't see your pattern, you don't trade. One, follow your trading rules to a T. Reduce your expectations on profit. If you're expecting 10%, reduce your profit expectation to maybe 5 or even 7%. The volatile markets tend to favor doing swing trades rather than trend trades. Identify potential support levels to trade from, and then be okay with just standing aside. Keep your powder dry and save your money. Remember, when the markets are volatile or weak, goal number one is protect your profits and your capital. So that brings us to the end of today's session. Just want to continue to remind you what Peter Brandt has to say is absolutely true. And then, hey, if you are looking for a journal, you're trying to learn how to journal. I know that we had several people just say, hey, I really love this journal. This is written by my son, Brandon. It is a bestseller over on Amazon. I will put a link down in the description. But it's excellent. It has two different sizes. The mini journal is, it's a little bit smaller. The number of pages is the same though. And the big journal is like the 8.5 by 11 size. And the link will be in the description. So until next week, I just want to say, Mark, I love the journal. Thank you, man. I appreciate that. I have gotten it, if you will, if you have bought one of the journals, please go leave a a review over on Amazon. My son and my grandchildren would thank you a lot. So Stephen and Neil, that's it for today. Any last and final? Okay, gentlemen, thank you very much. I was going to ask another question and basically you got 30 seconds each. What is the major thing you're looking for before you're ready to before you'll be ready to trade this market again? 30 seconds each. Steve, go.
We need to take out Wednesday, Thursdays, or Tuesday, Wednesday's prior pivot high.
Okay. Anil.
I'm just sticking to my pattern. I want a triple screen signal.
Roger that. So, guys, that's how complex and how easy it is. Because I know behind each one of those comments is a complex thought process that has been developed over years of trading. So that's it. What I'm looking for also, I'm looking for a big momentum shift. And I'm going back to looking longer term. If my monthly momentum is still pointing down and not showing, it gives me an indication that guess what? We may be still in for some big downside. So that's it. So aloha, trade well, prosper, mahalo. That means thank you, and God bless everybody. See you guys.
Thank you very much.
Take care.